Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're going to be trading using something called the Chaikin Money Flow Indicator. I think this is going to be new to a number of you. We're going to be adding it to our indicator toolbox. We're going to be walking through how it's built, how it might be used to generate entry signals. Should be a great discussion. Before we can get to that, though, let me first of all say hello to everybody out there. Great to see so many familiar names out there on YouTube. Hello there, Janelle and Eric, Chuck, Ranjit, Speak Truth, Ocean Life, Brown Buffalo, Jay Richardson, Mary, BJ, Selva, everybody else. Thanks for joining us week after week. We really do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, well, I do want to welcome you. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This is a Friday webcast series that kicks off promptly 1 Eastern time. We'd love to have you here in the live stream audience. Now, I also want to let you know that we have James Boyd hanging out in the chats with us. Everybody knows James. He's a fabulous presenter. I've been working with James now for 20 years. So great to have his support here. He's just going to be answering any questions there in chat that I can't get to, as long as they're on topic, they're not too far afield of what we're discussing, then James is there to pick up my slack for me. Thanks for having my back there, James. And James and I would also like to issue an invitation to everybody listening. If you have an account with X, make sure that you're following your favorite presenters there on X. You can find James there at James Boyd CS. You can find me on that platform at Cameron May CS. But that really is the very best place to connect with your favorite presenters in between these live streams. But let's get into this. As we go to discuss this probably new indicator to a lot of you, we have to consider the risks associated with trading. No matter what approach is used, these disclosures are important, so bear them in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so let's set an agenda for today. A few things that we need to accomplish. Number one is we have some existing positions. The markets are getting hammered. Let's go see what's going on with our example stock trades. And we have 3 current trades using 3 different technical approaches. So we'll revisit the logic of each of those approaches and see how each is performing. Then we're going to plan a new trade using this thing called the Chaikin Money Flow Indicator. How many of you are familiar with CMF, Chaikin Money Flow? Just chat in yes or no. I would suspect that most of you are not going to be terribly familiar with this. So we'll talk about how it's built and then get into how it might be used in the planning of a trade. And we're going to use it to plan a trade in our example paper money account and place a trade by the end of the discussion. So hopefully by the time we're done, we should all be comfortable with a new tool, not a sales pitch for this tool. We just like to make ourselves aware of the resources that are available within the Thinkorswim desktop. All right, so it looks like John says yes. Anybody else? High speed low drag says yep. MP says yes, but the whole bunch of no's. Greg says no, never heard of it. Andrew, nope. Ocean Life, nope. Jadelle, nope. Nope, no, 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 and on down the list goes. Good. So let's go at a pace that everybody can follow. I may lean on those that are a little bit more familiar with this indicator. I might have a question or two. We'll see. But let's go right to the Thinkorswim desktop trading software platform. And right here on the monitor tab, we can see our 3 existing positions. We have AbbVie, we have AON, and we have Netflix. And for those that are watching live, if we're paying attention to what's going on with the markets right now, you may realize, market's having a rough day. I think the S&P is down close to 2%. Now, a couple of our trades are actually not doing too bad today. One's up a bit, the other one's down a bit, the other one's taking a little bit stronger lumps. But sometimes when the markets are behaving like they are, just having long stock positions trading water can be an accomplishment, right? Overall, these positions are doing okay, which is saying something. That is an accomplishment unto itself in the markets that we've seen over this last month and a half. But let's go have a look at AbbVie first. So we have 25 shares. We have about $5,000 in each of these positions in our example portfolio. So let's go to the charts. Here's AbbVie. And if I go up here to my studies, let's load up our study set for our AbbVie trade. So this was a ribbon study trade. And what we noted was that RS1 had been crossing up above RS2. And now I might be using some terminology that's not familiar to everybody. If you weren't here to see that ribbon study discussion, we explained this study in detail, talked about how it might be used to plan a trade, and we planned a trade using the study. If you want to see that and the other ones that we're going to be talking about today, make sure that you are following us here on YouTube. Make sure that you've subscribed to the channel. So you can go down, if you haven't subscribed to our YouTube channel yet, you can go right down below the video stream right now, click on the subscribe button. Literally only takes a second, doesn't cost anything, but YouTube is where we house all of our playlists for our previous webcasts. So here on our homepage, and you can just look for this, Trader Talks Schwab Coaching Webcast. You find our homepage, and there you can find the playlists. And for example, if I click on those playlists and I scroll down, right about middle of the list of playlists, there's our advanced charting techniques. I can click on the view full playlist for the whole series, and we can see things like right down here, trading stocks with the ribbon study. So that's what we're doing right now. Now you can also join the live streams on our channel here. So let's go back here to our platform. And what we noticed here was ribbon study number 1 crossing up above ribbon study number 2, the two fastest ribbons, generating a potential signal right there. We took a trade just a couple of days following that crossover. And the plan here is to maintain that position as long as RS1 remains above RS2. And even with this pullback, it's interesting, we pulled back down to that RS1 level and we bounced over the last few days. But that trade is actually doing just fine. We're going to leave that one alone. Next up, we have AON. So let's go to our charts. Let's load up AON. And let's choose our studies. Load up the study set for the AON trade. This was last week's trade using Bollinger Bands. Rough week to be getting into a new long stock position, but overall this is doing okay. Not a great candle today, but doing all right since our entry. In this case, what we saw was that price had reached that lower Bollinger Band envelope, and we'd started to strengthen. We're seeing white candles coming up off of that low. And so the plan here is take an entry and ride it up to hopefully touching the upper envelope. Touching that upper, Fibonacci, Bollinger Band. Sorry, I had read a chat here and I was preparing my answer at the same time I'm trying to explain the logic of the trade. It's not a good plan, even if you feel like you're good at this. Anyway, yeah, there was a question here. Why let a green trade go break even or red? Well, it's not that we want that to happen. However, there is the original plan for a trade, and then there are things that happen during the execution of that plan. So if a plan included, well, I'm going to adapt to, let's say our trade is doing okay, and then it turns around, I'm going to sell at break even. Maybe that was part of the original plan. It wasn't in any of these scenarios. So what we're doing here is just executing some trade discipline. Now, that's not to say that that's a bad idea necessarily, but just the trader might want to write that into their plan before taking the position, rather than reinventing the trade along the way. What do we call that when we're trading according to new rules that we invented along the way? And I'm not putting words into the asker's mouth here. I'm just using this as an opportunity to discuss this. But yeah, that's called not having a plan. That's called making it up as we go. Yeah, so in this case, there was not a plan to just preserve profits if some arose. We either get up to our target or we maintain that original risk position with a stop down below our entry. So with the AON, we're going to let that one work. It's still doing okay. And finally, we have Netflix, also still on the profit side of things, which is nice. But here's our Netflix trade. Oh yeah, high-speed low drag, there's another word for it, confusion. Yep, changing the trade along the way. Yeah, it can lead to confusion. You know, sometimes it actually might lead to a more profitable outcome. Is that possible? Certainly. The difficulty there is that if one is trading sort of on the fly and we get to the end of the year and we're either up or down, whatever, but we want to go back and learn from either our successes or our mistakes, but we sort of change things on the fly, on the way, on a random basis, there's not really a lot there to learn. However, if we had a plan that we implemented consistently, whether it's profitable or not, we can look back at the details of that plan and see if we can make refinements to that. So, yep, that's another benefit of having things planned out first. So with Netflix, here was our plan. Let's load up our studies for Netflix. Netflix was a trend value momentum trade. So in this case, we noticed that our 50-period triangular moving average was still above our 100-period triangular moving average. So trend for a trader who uses this approach might be seen as bullish. Within that trend, in an effort to refine entries, they might look for, let's say, a value indicator, short-term value indicator like an RSI, and our RSI had dipped into the oversold territory and had crept up out of that, creeping up above 40, while we're still in that bullish trend position on our triangular moving averages. And finally, we also noted at the same time, our momentum indicator, trend, value, and momentum, our momentum indicator had gone from bright red to dark red, signaling a potential shift in momentum toward the bulls. And we added those up to an entry right here, took off. This is going back to that earlier question. Hey, we had a little bit of a profit built in here. Unrealized gain is a better way to put that because we haven't sold. It's not a profit until it's booked, right? And in this case, we've come back. Can be tempting to just say, hey, we have a red candle, time to get out. Wasn't part of the original plan. The plan here is as long as that 50 hangs out above that 100, we're staying with that trade. That could be a long-ish term trade, like maybe somebody got in back here. Well, it would have been more like this. And they might still be in that position. This could be us 6 months from now, still going higher. Time will tell. Time will tell. But for right now, we're maintaining that position. We're going to leave those on. And that leaves us with the balance of our time to discuss this new indicator. And we're going to be talking about the Chaikin money flow indicator. So I want to go to the charts. Let's bring up another stock here. I'm going to be using PM as our example stock. Let's clear off our study sets. We'll go up to all studies, or up to the studies icon up here, and just remove all studies. That just cleans off the chart. It doesn't delete study sets that we previously saved. It just gives us a blank slate to work with. Dave says the market's melting down. It sure is, Dave. Yep. Let's see. Trader said Monday it's starting great. Now it's bad. Yeah, we'll see. See how things turn out. But I want to focus our attention on this new indicator. So let's come up to the beaker icon, or the flask icon. I'm sorry. I know I've been corrected a million times. It is a flask, not a beaker. I haven't studied chemistry, especially in a lab setting, since I was probably 16 years old. But let's click on our flask. And let's type in Mark Chaikin's last name, Chaikin money flow. You'll hear this if you were to watch other YouTubers talk about this. You hear them say Chaikin or Chalkin, or give the gentleman his due. His name is Chaikin. Let's add that to our charts. And as I go to apply this, I'm going to make one unnecessary customization. This is purely for visibility purposes. I'm going to go over here to the gear icon, and I'm going to change the two lines that make up our indicator. Let's change them from a width of just 1 out of 5. Let's make that a 3 out of 5. I'm going to do that with the other line. 1 out of 5, let's change that to a 3 out of 5 and click OK. Click Apply, click OK again. Just makes it nice and thick. Let's see. Somebody just chatted in. James says, please remember to open the survey link prior to the calls in. Yeah, sorry. Yes, good. Thank you for calling that out. Every once in a while, that can kind of escape my view. There is a survey for those that are here in the live audience today. Do me a favor. You might need to scroll up a little bit like I just did in the chat window, but find that survey link click that link and just have it ready, as James suggested, for after the webcast is over. You can just give me some honest feedback there. I just will say, if you take the time to fill out our surveys, and they're little short surveys, 2 multiple choice questions, a comments box and a suggestion box. But if you fill those out, I'll take the time to read through that feedback. I read through your comments. I read the data that's aggregated for me. It's always helpful, so thank you for doing that. But back to our Chaikin Money Flow Index, let's talk about its basic appearance. Then we'll talk about how it's built, and then we'll talk about how it might be used to generate trade signals, okay? So what we'll notice here is, as we've added this to our chart, we wind up with 2 lines. We have a red line known as the 0 line, and we have a green line known as the CMF line. That's our Chaikin Money Flow line. And the 0 line always stays at 0. The Chaikin Money Flow oscillates up and down between 2 ranges. It can get to a high of 1, plus 1. It can get to a low of minus 1. That's the maximum within its range. And the closer to plus 1 it gets, the more bullish that's interpreted to be using this indicator. The closer it gets to minus 1, the more bearish. All right. But when there are shifts from one to the other, that can also be very significant for those that use this indicator. So let's talk about how this indicator is constructed. Well, Marc Chaikin had a personal conviction about price movement. He really felt that if price was going in one direction or the other, and was closing on a relatively consistent basis, let's say on a bullish move, closing close to the highs, and if those high closes were also supported by volume, he would see that as being particularly bullish for that stock. On the other hand, if he saw the stock prices were closing close to the lows of a trading session, and if that was supported by volume, by spiking volume, he would see that as being particularly bearish for a stock. So what he did is he just constructed this indicator as an attempt to display that graphically. So let's talk about exactly how he executed that. All right, so there are 3 steps in the way that Marc Chaikin constructs his indicator. 1, 2, 3. And the first thing we need to calculate is something called the money flow, abbreviated to MF here, multiplier. So that's going to be the first thing that we need to calculate. Next thing is going to be the money flow value. And then finally, we're going to be prepared to calculate this thing called the Chaikin money flow. Okay, so let's throw in a couple of colons here to get us ready. All right, so the money flow multiplier, and some indicators can be fairly complicated in their construction, and actually some can be the algorithm could be so advanced, I might just skip it, say forget it, it would take way too much time. In this case, I think we can tackle it. But really what Marc Chaikin here was attempting to quantify is how close are we closing on a regular basis to the highs of a day. So here's the way that was calculated. Oh, just got a hair in my mouth. Sorry about that. Anyway, but here's the way that's calculated. First of all, we take the distance from the low. So we take the closing price and subtract the low. That tells us, with our current candle, are we really close to that low? Or is there some distance up here at the close from the low? And now we subtract from that the distance from the high. So let's say we have our candle here with a high. Here's our close, here's our low, okay? Well, now we're going to take the high and subtract that low. So that gives us our distance, and then we just take the total candle length and divide this equation, or this outcome, by that length. So we're going to take our high minus our low, and that gives us what's called our multiplier. Now with each of these, I'm going to show you the algorithm, but then we're just going to put this into practice using a fairly straightforward example. And I think that connects the dots even more. Okay, but next up, having completed step number 1, we're now going to calculate the money flow value, which is simply we take the money flow multiplier, I'll abbreviate that to MFM, and we divide that by we multiply that by what Mark Chaikin calls the period volume. Okay. And then finally, we're ready for our Chaikin money flow bottom line calculation, which is we look at the full period that we're calculating this indicator for, and the default you're going to see is right down here. It's 21 days or 21 hours or 21 weeks, depending on which chart one is using. But we take the period sum of the money flow value and divide that by the period sum of volume. All right, those are the steps. Let me show you how that actually works. Let's make a supposition. Let's make a series of suppositions. Let's suppose 4 things about a specific trading day. So we'll just call it day 1 as we're calculating our indicator. So this would be, we'd calculate day 1 and then calculate day 2 and then do the full thing for 21 days. We're just going to do 2 days just to illustrate how this would work. And that'll have us prepared for understanding how the indicator is built. And then we can get into how it might be used. All right, but let's suppose our day 1 high was 50 bucks. Our day 1 low was $45. So we have a range for the day of 5 bucks. Now let's suppose that our day 1 close is at $49. So we have a $5 trading range, and we close pretty close to the top side of that range. To Mark Chaikin, this could be important. Ooh, this looks kind of bullish. But we also want to bring in an element of volume. Let's assume that our day 1 volume is 100 shares. With that information, we're ready to plug it all into the equation here and determine our CMF. Actually, it takes a couple of days. But let's take our multiplier. See if we can figure this out. Let's copy this. Let's paste it down below. What is our day 1 multiplier? Well, we have $50 for our high. We can just plug that in right here. We have 45 for our low. Actually, we can also plug it in right here. That's our high. Let's take our low, 45 and 45. And we have our close. Oh, you know what? I botched one thing. Did anybody catch this? I want to give credit if somebody saw this. Nope. I need to correct this in the algorithm here. It is not high minus low up here. It's high minus close. That shows us the distance between the close and the high. All right. As soon as I saw this in the numbers, I thought, these numbers are not right. Recognize that. That's going to be 49. So that's our close right here. So we have a close here, and we have a low here. All right. So this is going to tell us how far was it from our close to our low. Well, we closed actually $4 above the low. How far below the high were we? 50 minus 49, we are $1 from the high. 4 minus 1 is $3. It's a total of 3. Now we just take 3, divide that by the range of the day, which is 5, and that kicks out for us our multiplier. 3 divided by 5 is going to be what? 0.6. Yep. All right, now we're ready for this next step. Let's grab that, copy. Let's paste this down here. So our money flow value is our money flow multiplier, which was 0.6. So let's just plug in 0.6 here and multiply that by our period volume, which was 100 shares. And that gives us a money flow value of 60. And then finally, we take our Chaikin money flow and we tally up the total number of periods. Now we can't quite do this yet because we only have one trading session. So let's pause that right there. Let's grab this and let's do a day 2 calculation. I'm just going to make a couple of different assumptions here. Let's say day 2 had the same trading range, so it's kind of still going sideways. But in this case, we closed closer to that low, 50 to 45, closing at the 47 level. And also on day 2, we had just 50 shares traded. Okay, so let's indicate that each of these are for day 2. And let's plug these into the Chaikin money flow algorithm. So starting with this, let's get our multiplier, copy, paste this down here. And by the way, might need to move my camera shot there so that our audience can see that. But let's get our close, 47 here, 47 here. Our low was 45. Just need to plug that in here and plug that in here. And our high was 50. We'll patch that in right here and right here. So in this case, we know, we closed only $2 above that low. Our distance from the high was $3. So 2 minus 3, I know what that equals. That's a -1. And then -1 divided by 5 is going to give us what value? -1 divided by 5 is going to be it's going to be a -0.2. Okay. So now let's do our second step, which is going to be to multiply by the period volume. So our value is our money flow multiplier of -0.2. And I'm doing these in my head. If you catch me making a mistake, if I miss something, let me know. Times the period volume is 50, and -2 times 0.5 is going to be what? That's going to be -10. Right? Now we're ready to calculate that Chaikin money flow bottom line value. So let's grab that equation, copy that. Let's paste this down here. And we take the period. Oh, I missed the one line. Let's do that again. There we go. Copy that. Let's paste that down here. Get the full equation. What does this mean? The period sum of the money flow. Well, our money flow on day 1 was 60, the money flow value. Our money flow value on day 2 was -10. So 60 minus 10 is what? 50. All right. And then finally, we need our period sum of volume, meaning for the period that we're calculating this for. We're just doing it for 2 days. The actual indicator does it for 21 days, but at least this makes the point. We had 100 shares on day 1, 50 shares on day 2, giving us a sum total of 150. So that leaves us with a CMF value of 50 divided by 150, which is 0.33. That's a positive number indicating that we're tilting bullish, at least for these 2 days. And I think you might have suspected that already. We had a nice high close on day 1 on heavier volume, not as strong close on day 2 on lighter volume. So when we add that up and we change that over time, this may be an indication when we see this rising rapidly, it literally translates to, boy, prices are closing, not just going up day after day, but closing near session highs and likely supported by volume. The closer we get to that +1 value, the stronger the closes we're getting and the more volume we're picking up. Does that make sense? And I think you can see why to some traders that use this indicator, including Mark Chaikin, that might be an indication of technical strength on a stock. So That's the construction. It always takes a little bit of time to explain how something is constructed, and this webcast is being recorded. You can go back and revisit this logic of this math if you want to go back and look at the archive after the discussion. But the generation of trade signals is not nearly as difficult. So to Mark Chaikin, the way that he saw it is there were a couple of trade signals that are potentially generated. Now, obviously, traders are like the penultimate sort of tinkerers. They love to find their own ways to do things. So just because I say this is one way that the indicator might be interpreted doesn't mean it's the only way that every trader under the sun who uses CMF trades using CMF. But looking at our indicator here, what a trader will typically look for if let's say they're looking for bearishness. What they might look for is a tipping point when CMF has been coming down and it crosses over that zero line, sometimes referred to as the signal line. What this translates to is that there has been a shift from net bullishness to net bearishness as measured by the CMF indicator, and that may signal that prices are likely to start to struggle. So in this case, that looks like that lines up about right here on our chart. And you see, boy, the chart really did not get much higher from that point. And after that, PM was in for a pretty good drop. Now, what this indicator does not attempt to do is provide a target price. I know that traders, we love to just, there are traders that just want things to be fully automated. Just tell me when to get in, tell me when to get out, make my life easy. Well, this indicator is designed to provide a signal for entry, but the trader might need to bring their own experience to planning for the exit. Now, some might try to just trade the crossovers, and that's conceptually possible. But for others, instead, when they get a bearish signal, they may, as an example, make a target at a previous price low. So in this case, there was a low back here before the signal. The trader might be looking to that as a potential exit. Okay, so that's a possibility. But let me remove that drawing. And the other signal that's generated is bullish. And that's when our CMF line crosses up over the zero line or our signal line, signaling again here that there's been some strengthening supported by volume where prices are now closing closer to their highs. And so that generates our signal as CMF crosses like it did right here. And that looks like that lines up about with this candle right there. So in that case, again, turned out to be a high quality signal. Not every signal is going to work perfectly on CMF. There is no perfect indicator out there. But in this case, a couple of pretty good examples of signals that can be generated. But one thing that caught my eye as I was looking at Philip Morris here is look what just happened recently. We did get a bearish signal, but quickly replaced with a bullish signal. That bearish signal, for some, they might have been a little bit hesitant to take that trade, because the last one we got was actually up near a resistance level on maybe a trend that was starting to struggle. In this case, we got a bearish signal. It was closer to a support level in a trend that's been primarily bullish. So in this case, yeah, if a trader took that signal, sorry, spoiler alert, didn't work out. Not all signals do with this indicator. But we did just get a fresh new bullish signal. That looks like it was just a couple of days ago. And interesting to me that here we have a stock that in a very tough day on the markets, at least in the grand scheme of things, a 2% down day is a pretty bad day for the S&P 500. This stock is holding up kind of nicely. And it just generated that new signal. So if we were to take an entry here, where might we plan an exit with both sides of the trade? On TMTM, hey, welcome. It's always good to have you here. Even if you arrive late, still welcome. All right. But yeah, our trader might look to recent highs. There's not a lot in that trade. If we're entering right now at about 155, maybe that gets us up closer to 160, a few dollars on a $155 stock. There's not a lot there, a couple of percentage points. Well, a trader might also look at recent moves. These are what we call measured move trades. And in this case, in a couple of jumps, the stock has made it up to its current levels. It jumped right here, and it jumped right here. And that seems to be actually relatively proportionate to previous moves, from here to here, from here to here, on the retracement, on this advance. That advance a little bit smaller, but let's just measure those just quickly. This one looks like it went from about 116 up to about 131. That was a 15-ish point move. This one, I'm going to ignore the tail here. That might be adding a little bit to the trade, but that looks like about 143 up to about 158. Interesting. Another 15-point swing up. So if we recently came off a low around 150, and we generated a signal there, maybe this is the start of a new move. Could be. Is this one heading up to 165? Let's put that in here. Let's say that we have an objective to maybe take profits if we make a measured move up to 165. So that'll be our plan for taking profits. I'm going to put a note right here on our chart. 165 target. Okay. And where might a stop be placed? Well, below a recent support level, and that does look like it's below, in this case, 150. Let's go a percentage point below that would be 148.50. So I'm going to draw in a line there and make that the other side of our trade. Let's come pretty close to the current day, and we'll go up to 148.50. There we are. And I'm going to call this our stop. There we go. All right, so with that plan now, let's go place our trades. So remember these numbers, 165 and 148. Let's go to our trade tab. And again, we're going to spend about $5,000 on this example trade. Let's get out our calculator. About a $5,000 investment divided by a 155-ish dollar stock gets us about 32 shares. So we're going to right-click on our ask price. Let's put in a custom buy order with an OCO bracket. That just means that we're going to put in an order to buy some shares, and then we'll sell those shares if they get up toward their target or if they fall down to their stop. So let's tie the quantities here together, and we decided we were going to do 32 shares. Is that right? I think that's right. As we move on, you'll see the sell orders will automatically change to minus 32. I'm going to put this in as a market order. Obviously, there are risks associated with submitting market orders. We're not guaranteed to get the current price. We could move, especially the markets are rapidly changing. But for our limit order, this is going to be our target price. And that was going to be up at 165. We'll make that a good till canceled order. And our stop, we had decided we're going to have down there at 148.50. Make this good till canceled. There we go. All right, so let's click confirm and send. Buying 32 shares of PM at the market price. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. Now, with our stop, we're going to attempt to sell if we can get up to 165. That's our limit. We also have a stop down at 148. But just remember, with stop orders, there's no guarantee that the execution price, that's the price that's received after the stop is triggered, will be equal to or even near the activation price, which is the trigger price for our stop. 148.50 is our trigger. We're not guaranteed to sell at exactly 148.50. Could be substantially less than that if there's a strong move to the downside. But yeah, about a $5,000 trade, not a commission on this trade, but there can be on some types of trades. But I'm going to send that order off and let's see. Okay, we bought it at 154.75. So from here, we'll let it run. We'll see how that goes. But guys, that is your introduction to the Chaikin money flow indicator. That's not an incredibly complicated indicator, but it does take some learning the first time we're exposed to it to really understand how it works, to really understand its implications. Really putting it into practice using a traditional approach to it isn't terribly complicated. So we'll see from here if it turns out to be a valuable signal. All right, but everybody, we have managed, well, didn't have to manage anything, but we took a look at our existing positions today. We talked through the construction of Chaikin money flow, and we put it into practice with an example trade. That is check, 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 all objectives accomplished. This is what we do on Fridays. We learn new stuff about charting. So hope you enjoyed that one. We'll be back again next Friday to follow up on our current positions and to learn something new and to put it into practice so that we're just rounding out our abilities as chartists. Robert, you say you're going to be watching the replay. That's fabulous. Enjoy that. Okay, a few suggestions before I turn you off to enjoy the rest of our webcasts and enjoy your weekend. Number one is to make sure that you are subscribed to our YouTube channel. So you can go down, click on the subscribe button right now. It doesn't cost anything. It literally only takes a second. Don't click on it if you've already clicked on it, though. That'll unsubscribe you, which is the opposite of what we want here. But our YouTube channel is where we house our playlist for our completed webcasts. You can find the webcast for this playlist and a whole bunch of others right there. The webcast series right here. You can also join our live streams here. Or if you have some other key point of interest, like so let's say you wanted to learn about you saw me use the TVM strategy set, trend value momentum. Well, let's type that in here. TVM, hit enter. What do you know? Understanding the trend value momentum chart trading system. That's where we discussed it and put it into practice. We've traded it twice since then. Also, make sure that you're following James and me on X. You can find James there at James Boyd CS. You can find me on X at Cameron May CS. Let me show you what that looks like because you do want to be precise here. Always on social media, know who you are actually dealing with. My handle there at Cameron May CS, James at James Boyd CS. Spell it correctly, that's important. But yeah, give us a follow. And this is where you can just see, our thoughts on other things. By the way, I just posted a video today that was giving an introduction to a different indicator. Probably this one's going to be more familiar to a lot of you. But good information to be found there. And thank you to everybody that's already clicked the like button. I can see, 127 people watching right now. 51 have already clicked the thumbs up. That's always appreciated. It always helps. It's the 1 second thing you can do to help out right every single time you watch one of our webcasts. If you enjoy one of our webcasts, click the like button. That's like applauding for your presenter. It also gives my webcast a boost in the YouTube algorithm. It helps more people find the webcast and learn about things like the CMF. All right, time for me to let you go. I've talked enough. You can fill out that survey now. Thank you for doing that. That's always appreciated. I will see you next Friday. I'll also look for you in my other webcasts. I have something new every day of the trading week. And I'll look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.